Institutional investors begin to place their bets on Ethereum as the network utility grows as a financial market. Standard Chartered analysts believe that Ethereum has more room to go up and could even surpass Bitcoin as the #1 cryptocurrency by market cap. Whereas the Bitcoin or Ethereum debate rages on between early traders and maxis, London-based financial institution Commonplace Chartered already appears to have picked a side. The financial institution, in a current analysis, stated Ethereum might outperform Bitcoin over the following few years, even stating it structurally values the world's second-largest cryptocurrency by market cap at over $35,000. Structurally, we value Ethereum at $26,000 to $35,000. We see the Ethereum-Bitcoin cross doubling to 0.161, a degree at which Ethereum's market cap would catch as much as Bitcoin. According to the financial institution, the truth is that whereas Bitcoin's valuation may very well be in contrast towards the worth of bank card corporations, the valuation of Ethereum may very well be in contrast towards the entirety of all world banks when it comes to their market cap. Standard Chartered believe Ethereum is undervalued. Welcome to Savvy Finance. We want to take this opportunity to thank all our subscribers and viewers for your love and support. Thank you so much. The blockchain's recent London hard fork has brought a lot of attention to Ethereum. With 224,700 Ether burned to date and another 7,500,000 tokens locked in Ethereum 2.0 deposit contracts, many analysts believe a massive supply shock is underway. Standard Chartered is one of the latest financial institutions to jump the bullish case for Ethereum. In a recent report, the British banking giant said that Ethereum could be thought of as a financial market, as it enables users to lend and earn interest on investments, among many other services. Such an immense utility could allow Ethereum to catch up with Bitcoin's market capitalization, the report said. The multinational banking and financial services company put a $26,000 to $35,000 price target on Ethereum once Bitcoin crosses $175,000, representing a 1,000% increase from the current levels. A $35,000 Ethereum would give Ethereum a market cap of roughly $4 trillion, depending on the deflationary impact of its EIP 1559 update. Also, more fund managers see greater potential in Ethereum than Bitcoin, according to a CoinShares report with survey data published recently, despite the total value locked in Ethereum decreasing this year amid more competition in the Layer 1 space. 42% of investors see Ethereum as having the most compelling growth outlook compared to Bitcoin at 18%, the survey found. The findings come as market share of Ethereum investment products has risen from 11% at the beginning of the year to 26%. The conversations we were having 2 years ago were Bitcoin and crypto is a joke. CoinShares investment strategist James Butterfill, who authored the report, told Blockworks. A year ago it was, okay, Bitcoin's a really interesting concept, tell me more. And this year the trend I'm seeing amongst investors is I want to look at the altcoin space. I want to diversify. I want to see what else is out there. The first report of its kind by CoinShares, with data as of September 15, reflected the views of fund managers representing more than $400 billion in assets under management. Beautiful plans to publish a survey with the same questions every 2 months. Despite survey respondents' bullish feelings about Ether, roughly the same percentage of fund managers reported investing in Bitcoin. While the 2 largest cryptocurrencies by market capitalization remain at the core of digital asset investment portfolios, allocations to Cardano and Polkadot are increasing. Jan van Eyck, CEO of fund manager Van Eyck, said during a virtual panel last week that the big development for crypto in 2021 was Ether's performance and the Ethereum network's upgrade from proof of work to proof of stake. People understand that a lot of the blockchain applications are built on top of this smart contract software, he explained. Competition in the Layer 1 space is heated up in recent months amid a growing demand for lower transaction fees and greater throughput than what the proof-of-work Ethereum network currently provides. Ethereum's TVL dominance has dropped from 98.22% on January 1 to 68.78% as of Monday, according to Diffalama.com. Beautiful said he was surprised that less than 5% of respondents labeled Solana as having the most compelling growth outlook, but expects to see that number grow in future surveys. The coin has the 7th largest market capitalization at about $48 billion according to CoinGecko, and its price was up about 19% over the past 7 days. Though not technically as quick as something like Solana, they like Ethereum because it's much bigger and more decentralized essentially, the CoinShares strategist said about some investors. Brian Brooks, former CEO of Binance US, noted in the same panel as Van Eyck that while Layer 1 competitors will battle Ethereum to be the smart contract platform king, Bitcoin will remain as a coin crypto investors allocate to.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
Bitcoin is really the tracking stock of decentralization overall, Brooks explained. It is the relatively price-stable, energy-based replacement for gold, and that's always going to be there for a bunch of reasons. Who is embracing digital assets and why? Respondents who have digital assets in their portfolio were mixed on whether they thought inflation was permanent or transitory, suggesting that some do not invest in crypto as a hedge against inflation. The report indicates about 35% of investors see their investments into digital assets as mainly a speculative one, while 25% see it as a diversification tool, it found. What it implies is that people are buying without looking at any fundamentals, and I don't think that's necessarily the case, Beautiful said. Maybe it reflects that investors still don't fully understand the asset class, but they know there's a lot of hype around it, and they want to be a part of that. It is a complex asset class to understand. The report revealed stark contrasts in allocations to digital assets from different types of investors. While family offices have the highest allocation to crypto at 23%, retail and institutional investors remain hesitant, with surveyed wealth managers allocating just 0.1% to digital assets. Of the survey respondents who said they had not invested in crypto, 21% said regulation was the main reason, while 19% cited corporate restrictions. Politics, government bans, and regulation make up 58% of the perceived key risks for digital assets. Nearly 15% reported volatility as a key risk. I think it's right for investors to be concerned, Beautiful said. It's a known unknown. You can't stick the regulator's mindset into a spreadsheet and figure out what's going to happen, so it's just a case of sitting and waiting and seeing. Ethereum has grown from its early sound cash narrative to an ecosystem that spans Web3 dApps, non-fungible tokens, sensible contract-based monetary providers, decentralized finance, and far more. Whereas potential returns could also be better for Ethereum than for Bitcoin, dangers are additionally increased. At Savvy Finance, we will continue to invest in both Bitcoin and Ethereum, while not forgetting our second largest holdings, Cardano. Till our next video, stay savvy.